All right, good evening. This is Ken Long from Tortoise Capital with the online swing trading webinar for February 21st, 2016. And I want to follow this agenda. I'm going to just make some comments about the week in review, the things that we were working on this week, and some observations about the use of the message boards and the write boards. I'm going to review the videos that I hung this week. I'm going to extend the delivery date for those, if you will, to February 28th. This was a very busy week for a lot of folks, and so I don't want to get too far ahead of ourselves on this, because this was the week for learning the systems, and I added some commentary like executive summaries on those systems this week, and you may not have had a chance to review them all, so I'm going to push that forward again and listen to any questions you may have next week as well. In addition, I hung a bunch of supplemental videos during the week, so there was quite a lot of workload this week, and I really think it should have been probably expressed over 2 weeks, so we'll do that. Then I'm going to cover the homework. I have a number of trading insight topics that have come out of the mastermind experience in the chat room at various times, which I've been collecting, and I think there's a number of them that I want to give a quick shout out to, and then give you a chance to maybe if there's some that you would like to hear more on, then you can put that on the write board for next week, so I'll know I can get some videos done on those special topics as well. And then I have about 15 or 20 swing trade frames that came out of the weekend report, so hopefully you've had a chance to look at that report. What I'm going to do is just blast right through those and describe where I got the symbols of interest to look at, and then I'm going to pull those charts up and narrate my way through them, so you can see how I am thinking about trade framing these swing signals that we've got. A lot of these are like RLCO or Auto Framer or Max Payne kinds of things because of the nature of the market this last 6 weeks. So these are really designed to be swing trading one day at a time, but I think it's important to start looking at some of these in these kinds of markets, because I feel like we are at a critical state in the market, and there's a potential turning point here. And so we'll see how I try to get prepared for trades in either direction. I think this weekend is a good way to do that. So let's get on with the agenda then. And as always, if you have any questions, go ahead and chunk them into the question box there. The week in review, the things I want to say about that are I think you guys are doing a fantastic job on the use of the message boards. Catherine did a great job organizing that for us and getting it sorted out where you can filter by the guys in your team. And I would strongly encourage you to graze through there and see what the different study groups are working on. There's some terrific additional readings that have been posted inside there. And I think the quality of the discourse is excellent. It was everything that I hoped that the work groups would be. I think you guys are taking advantage of the resources of each other very well. So keep up the good work on that. I am trying to post commentary in there as I go and as it adds value. The videos for this week, there were a couple things. One of them was a short discourse on the morning trading plan script and why that's important to get your mind right on that. And then I uploaded anywhere from a 5 to 15 minute executive summary of the rule sets. I didn't read the rule sets to you, but what I try to do is hit the highlights of the concepts for channeling, overreaction, triple screen, 5 days down, 551W, and the washout pattern. And these are a lot of maybe the top level insights that I usually talk about in workshops, where to add a little context to the trading systems themselves. And then for for most of them, I gave some sample trade setups of what they look like on day 0 on the setup day, so you can see what what the signal should be producing for you, so you can see what a setup day typically looks like. Also hung the executive summary of the weekend report for February 20th. That's one that I am using to come up with the charts of interest for this week. And so I would like you to do your standard analysis of the weekend report. And again, if you're at level, you place yourself in what level you think you're at. Level 1, what I want you to do is just have your blank worksheet open, and then as I narrate through the reports, listen for the things that I'm saying and the justifications that I'm saying, and the by indicator to look for certain targets. Level 2, you do that yourself and then compare what I say to what you say, and then look for discrepancies in order to refine your technique. And then on level 3, you have adapted the systems and the scanning of reports to your own trading practice, and you are self-actualized. Now, in addition to the systems and the weekend report, I added some supplemental videos. So just let me hit those real quick. So I talked a little bit about market classification in general. The mental models that I use when I think about the market in an integrated way, and I think it just gives some background insights. The ways that I organize my perception and my learnings and the insights may help put a little meat on the bones. I talked briefly about the standard use of descriptive statistics and how I use that to format reports, so you can see the themes in there. I get a short summary on the swing trading performance using mechanical trading from back in the day when I was using these exclusively in a mechanical setting, and that's mostly from about 2005 through about 2008. I was doing a lot of mechanical swing trading as written, and after about those 3 years, I started developing extra techniques for intraday and one day at a time, swing trading one day at a time, and I began to modify how I do the swing trading. But those 3 years form the basis for some long-term performance expectations on these. Now, to be fair, that period of time was some grinding bull markets to the upside, and so when we get into bull markets, or bear markets, or raging bulls, the performance numbers are probably going to change. But it's a way to get started on performance expectations for those systems. And then I articulated some beliefs about systems and why I think systemic thinking is important. That's going to be developed into a full 10-week course, I think. I've drafted up some notes for Van. He's going to add that to the Super Trader program, and it really has to do with systemic thinking and techniques that come from swing trading, or from systems thinking for traders at different time frames. So, as you know, I think of things in terms of systems, strategies, techniques, and tips. Tips are just things that we discovered along the way. They are what they are. Systems are those well-defined, robotically tradable strategies. Strategies themselves are approaches to the market that allow some discretion, so it's a mix of, or a hybrid of, mechanical and discretion. And so I put a number of systems thinking models into that discussion to show how you might think about organizing your own trading space or your knowledge space. If you think about the exercise we did last week on building the house of trading, that's exactly one of those kinds of models that allow you to organize your perspective and your experience in a structured way to bring discipline and preparation to your work. There was also a short one that I did on the RLXD for trend trade continuations. It was inside the chat room and in reference to an intraday trade, but the trade frame or the patterns on the chart were so typical of swing trading as well that I wanted to describe how I use the RLXD as a way to get on board or to reinforce or to re-enter or to take profits from standard momentum trends. And I think it's a short lesson, maybe 3 or 4 minutes, but I think the ideas pertain to swing trading just as well as intraday trading. It really does look like a general purpose application of the RLCO framework in my view, and so I think that's one that I would really like to see you review and give some thought to. Now the videos that are already hung for the week ahead, and these are going to be the only additional ones for this week, so there's quite a few that you got to look at there if you haven't seen them yet. So the only additional ones are these, and this is the daily trading plan preparation, and this one's fundamental. This is how I go systematically from close of the trading day at the end of the day all the way through to being ready for the trading day ahead. And so that one shows you all the the cognitive processing, the information management that I go through to go from the end of trading through a strategic review, and then systematic preparation and rehearsal, so that I have my mind ready to go when it comes time for execution. The second one, how to put the preparation into practice, is a discussion of organizing the trading day for execution. And then both of those taken together are modeled after this plan, prepare, execute, assess model, and that's a military decision-making model, and it's an iterative thing. It's very similar to action research, in fact, which I think I've given you a speech on already. But plan, prepare, execute, assess is that cycle of thinking that allows us to be ready for action and then learn systematically from that action to be ready for the next round. And then the last one, sample daily report preparation usage, and that's really just a sample reading of one of the reports, and like I typically do at the live trading workshop, and it's really just to go through to identify different targets and prepare some symbols. So those are the videos for the week ahead, and the links are all on that whiteboard and are ready to execute now. Next up is homework. So let's just take a look at some of those. These were all the things that we did in the past 2 weeks. Oh, I should have had the 24th on there. I want to make sure that you've scanned the rule sets and reviewed the system descriptions. I want you to try to organize one swing trade frame this week. So I'm just going to roll the February 21st homework forward 1 week. And then I want you to annotate one closed swing trade if the signal to close it occurred for you. And I want you to develop a weekly trading plan this week on the basis of that analysis of the weekend report. And then you can, I think, maybe use the trade frames that I'm about to provide for you. If you want to just start from those, that'll give you a jump start on the week ahead. You might want to pick a half a dozen of these or so and work on them, or work on your own. That would be fine too. There were some specific questions that were asked of me to comment on this week, so let me see if I can get these. Terry asked, when entering a swing trade using the auto framer, sometimes the entry is hit on the first bar, morning gap, and then down she goes. Does the 10 a.m. rule apply? I would say generally yes. you know, if you don't want to become like an intraday trader and trying to optimize those entries, even if you just waited an hour, I think you'd be fine. Let the first hour bar close and then play an hourly breakout. If the price is still above the green line, go ahead and take it. Or if it's an hourly breakout, go ahead and take it. If you're going to be around in the morning, I think you can use some of that morning hook technique to get a better entry. But otherwise, one of the things you have to compute is the maximum price that you can afford to pay and still have 2 to 1. So here's what I mean by that. Now, typically, we're going to have a trade frame that looks like this, where the day before we had a market day that looked like this, and so when we trade frame that one, we're going to buy 5 cents above the high and a stop 5 cents below the low, and then we got this 10-day high over here, and that's our target. So we've got, this is our range risk of an R, and we'll call that let's call it in this case 3R. So if we get, what you're talking about is if there's a gap up at the opening, should I buy it immediately? Well, one of the things you can do and should do is figure out how high I can buy it and still have, and my risk would still be down here, and I can still have a 2 to 1 reward to risk ratio on a test of the 10-day high. So what you'll see that gives you is there's like an entry box that says if it opens inside yesterday's range and starts moving up, so here's yesterday's range. If it opens inside yesterday's range and goes up, I can buy it 5 cents above. I can buy it right here. Or if it gaps above this, if it's up in this box, if it's inside the box, I can still buy it with my stop down here. But if it gaps up higher than that level, then I no longer have 2 to 1, and then I don't take the trade unless it comes back down, finds support, and then goes back above yesterday's high. Then I would buy that one right here. All right, Terry, does that make sense to you? I think Terry was on. Okay, good. Patrick asked on ETF2, what's the difference between the theoretical exposure and the model portfolio? So, briefly, what you'll notice on the report page is that there's an asset allocation number on the left-hand side where it will talk about percent invested and then the percent in cash. And where it stands right now is 0 and 100. Okay, and the reason is that all 10 of the regional indexes are on cash positions. Let me just, rather than draw it, let me just bring it over and show you. How about that? Okay, so this is the screen for the ETF2, and this is really more of an asset allocation adjusted weekly than it is swing trades per se. So it's more like a longer term system with weekly adjustments. So that's why I haven't. I'm going to talk about it when we get into the strategy week. But since you asked, so on this regional summary, these are the 10 big ETFs in the world market model. And I check each one of them against their own moving average for a filter of either buy it or it's in cash. Well, right now, all of them are below their 4-month moving average, so they get signaled to cash. So in the asset allocation strategy, each one of those controls about 10% of the allocation. So when all 10 are on cash, then the theoretical allocation should be 0% invested and 100% cash. Now, if I had no positions and I had all my portfolio in cash, what that means is I cannot add any new positions. And so this tends to fluctuate fairly rapidly. Right now it's been cash for a while, but let's say that right now I had no positions. And then next week, two of them went to a buy position. This would shift to 20% invested, 80% cash in the theoretical model because the market is slowly starting to heal. What that tells me is that in ETF2, I can buy two new positions from the list of relative strength winners, and then, but no more than that. The most I can buy any week is like 4, so that we don't go whole hog. Uh, but if two of them went to cash or went to invested instead of cash, we'd be 20/80. Then I could buy two positions. So the asset allocation model is a governor of how much money I can add into the market based on the health of all the regions. Is that making sense so far? Okay. But then what I have is in previous weeks, the market was healthy enough for me to buy positions, and so I bought from among the relative strength leaders according to the guidance that's in the ETF2 principles. And each one of those has a 10% trailing stop from the highest high while in the trade. Once I have that position on, the only way I get out of that position is if that stop is hit or if it goes below the database average and is now no longer a relative strength leader, then I'll go ahead and get out of it. But I will not use the broad market health check as a way to justify getting out of a relative strength leader. I let each trade's managed stop guide that. So let's say I had 10 positions on, and the market went from 100% invested to 50% invested, 50% cash. And let's say that 6 of the positions were hit. So now I only have 40% invested, and I have 60% cash in the actual portfolio. And then the investment cash ratio is 50-50. That would allow me to add one new position to get me back up to my not to exceed asset allocation. I can buy up to that level, but I can't go past it. So in effect, what this does is prevents us in a really sharply falling market to put money back into it once it gets cycled out. So if some of those relative strength leaders got hit and then I generated cash, there could still be some relative strength leaders that are still on a buy position because they have so far to fall that they're not back below their 4-month moving average. But the asset allocation would prevent me from throwing that money back into the fire until the whole market itself began to stabilize a little bit. So this is what creates a very conservative risk exposure to money. The market has to be healthy enough to put the new money in, and then once the money is in, the dynamics of each position determine whether or not it gets out, but not the overall asset allocation. Yes, correct. Robert says it stops us from reinvesting the cash while the model is in this current status. That's absolutely correct. And it's performing just like it is supposed to right now. We started the year at 10 positions. We're down to 7. 30% of the model portfolio is in cash. All of the 7 positions are doing are not even near their 10% trailing stop, and that model's about 4% ahead of the S&P right now. So it's conservative, and it's the this regulator, this governor is keeping us from throwing money into the market too soon. Make sense? I still owe you the rule set on that too. I'll get that hung. SQN versus the previous methodology. Yes, I'm using the SQN as a way to define the risk-adjusted performance value of these. It's a very nice way to. Oh, those are Robert. Sorry. Yeah. So Robert, you asked me about the SQN versus the previous methodology in ETF2. I am very much in favor of it. It is the slowest of the three members of ETF2 to change. So you get the strength is changes pretty quickly. The consistency is a 10-week moving average. And then the 40-week system quality number is the slowest of the three measurements in the ETF2 to change. And so it's performing as designed. I will send you the stats on ETF2, the expectancy and wins and all that later. I've got, the record of all the live forward trades of it, and I can provide those in a separate email. Okay, so that was all the FAQs. So what I want to say about that now is, as you go through the homework and the messages with each other and the videos, if there are things that you can't resolve or you just need to hear me talk about, please use that consolidated FAQ right board to put topics on there so that I can make sure that I address the things that you need me to talk about, so that if you just have it buried in the message boards, I may not see it. So get it up on this chalkboard like you did here so that I can talk about these going forward. As we start getting deeper and deeper into the technical parts of the systems, that will become more important. Okay. Okay, so the next thing I want to cover is, I would just say, the chat room and mastermind insights. And I'm going to give a thumbnail description of these because there's about 20 of them. And so what I'd like you to do is just kind of take notes on these as I'm talking about them. And then if there's something that you really want me to cover more about, I can add that into some videos this week, and I'll get them posted. And so these were originally some things that I started talking to the Super Trader program about, because I was concerned that they were not paying enough attention to the ongoing lessons learned that come from the practice of trading, that they're doing a lot of theoretical work and psychological work in preparation, and then they get their systems and then off they go. And I was concerned that I think it's important that you continue to learn as you go in a systematic way, like using action research and action learning, like in the reflective learning journal. And that's so important that I wanted to share with them the things that I'm learning and that our chat room has learned over the last 5 to 10 years of doing this. Maybe this is the next ebook or the next 100 essays. So the first thing is that there is indisputably a chat room mastermind effect, and that is, you're already seeing it in the discussion boards in this classroom, and then also in the daily practice of the chat room, that there is a tremendous amount of crosstalk and mutual learning and mutual support that's going on. Enough on that. Feeding the bulldog every day, and this is from my own practice, and that is, I want to get paid every day. That when I'm looking at open profits and I'm looking at performance numbers and all that stuff, for me psychologically it's a good thing to get paid every day early, so that I can put some money in the bank. I can take care of business and practically ring the bell. Where do beliefs come from? Maybe this is one you might want to hear more on later, but when I did the washout video, I explained where I came up with a set of beliefs that ended up becoming the foundation for the washout pattern. It started with a list of conventional beliefs from readings and from the media, and then I took the exact opposite of each belief and then turned that operationally into a system. So when you are describing the beliefs that you have that support your processes and support your actions, I really think it's important to trace that back to the original source and then consider the evidence for it, and then what would it take to convince you that belief was wrong, and then ask the question, what's the value add of having that belief? Because I have that belief, what can I now go forward and do? Or is that belief even necessary at all? Is that a belief that I have to have? Do I have to take a position on that idea, or can I just let it go and just concentrate on other things that matter? So the discussion of where do beliefs come from is foundational to the psychological work um, in your learning journal. Connectivism and the market mosaic. Connectivism is this idea that the world is so large that it can't fit inside your head. And so what we end up doing is linking together cognitive resources to paint a larger picture that's three-dimensional or four-dimensional, adding time. And so the market mosaic is like that for us. There's a lot of indicators that are in there that are not tied directly to actionable systems, but which taken collectively help me start feeling my way through this fog of the market state. And so connectivism is the way in educational theory we talk about the phenomenon of linking together networks of actors and processes to gain a rich description of the world. So the market mosaic is all those extra things in the daily and weekly report that give some insights into this complex market mosaic. The next one is the trader quality number, and this is a discussion really for the difference between systems and strategies. So a system is something that you can trade robotically, like the frog intraday, or any of these 6 systems that I've provided you. If you were to trade them mechanically, robotically, you would come up with a particular system quality number. If you decided to apply your discretion to change a rule or to modify a rule, then you're going to get a different result. So what you should do is, every time you do that, document the change that you made and the justification for it, so you can study the connection to the belief. And then when you have enough of those data points, you can now determine statistically if that decision adds value or reduces value over the long term and over large data sets. And then you can compare the difference between your performance with discretion and without discretion. And then whatever that number is your trader quality number. And for each of your systems and in your time frames, you should know whether or not your judgment is adding value to the robotic system or not. And if it is, then you should continue to use it and continue to calibrate it until such time as it no longer adds value. And from that, you can start finding cause and effect things in your decision making, which can be systematized and added as rules to your system, and thus reduce the workload and the pressure on your intuition to keep going. So that's sort of the action research inductive process of learning in a nutshell. And the idea is the trader quality number that gives you insight into whether or not you should keep doing what you're doing. Next, this leads into your system is what you do. It's not what you write. And this is important for discretionary traders. You can have heuristics and rules of thumb, but remember that what you actually do is what your system is, and that the written words on a page are only the guide unless you follow them religiously. So your system is what you do, not what you say. Double loop learning, learning styles, auditory learning. So double loop learning has to do with the metacognition or reflection about how you learn and whether or not that is effective. So a single loop learning is where you study something, you come to a conclusion, then you make a change. Double loop learning means that you consider why you thought that was a lesson that should be learned, what process you used to evaluate the data, and you're looking at your process for learning and not just the content of the things that come out of that particular trade. And then when you couple that with learning styles, and for me, and being an auditory learner, there are ways in which you can improve your sustainable rate of learning if you pay attention to how you process information and where you are most effective in terms of visual, auditory, and kinesthetic. Brain mode power can help on that one. And it has a lot to do with getting your mind state right and having a routine process for doing the daily, weekly, monthly after action reviews that get you into the learning mode. The quote, "that coal won't shovel itself," that's a note to myself that a lot of times I just get satisfied with having the insight. And I know right now I'm almost 60, and a couple months ago I had an idea in the hot tub and I didn't write it down, and for the life of me I can't remember what it was, but I know it was an extension of the RLFF framework, I believe. And I'm just kicking myself for not having written it down and then systematically developed it, because as much fun as it was to come up with the idea, if I can't put it into practice, if I don't deliver on it, then the insight is of little value. And so in the 4-part learning journal, you have 4 columns. You have the aha moment, which is the rich description of what happened. You have the column for reflective learning, and that's where the insight is developed. The 3rd column is the important one, the commitment to action, what you're going to do about it. And then the 4th column is the results. And in this last example, because I didn't get it into the journal in time, that thing has escaped my brain. Now I got to wait for it to come around on the merry-go-round again. Hopefully, maybe it was something about the hybrid frog. I'm hoping that's what it is, because that's a pretty good idea. So that's what I mean by the coal won't shovel itself. It's not enough just to have the idea and the flash of insight. You've got to deliver that. You got to deliver that product on time, on spec to a paying customer. And that's what I mean. We still have to do the work. You got to shovel that coal and get it done. Telling the universe. When you put things in writing, when you document them, when you make a declaration that you're going to do something, it makes a difference. You've put the universe on notice that you are committed to doing that, and that that's your intention. That intention helps you achieve that. So putting things in writing, working with your accountability partner, putting a mark on the wall, that's part of that part 3 of the learning journal. Get it in writing and then make it happen, make it manifest. Remember that all your preparation is for the moment of execution so that you can trade that in a relaxed manner and execute. That the preparation sometimes feels like the fun. For me, it's the fun part. But if that does not lead to improved performance or actual performance, then the preparation, I have to question, why am I even doing that? On days where the market gaps up and then sells off the entire rest of the day for a range stat move, I have to look at myself and say, now, on this perfect intraday trending downward day that moved a range stat, was I on the correct side of the market? Was I getting, if I started long, did I correct myself and get short and stay that way and keep exploiting the primary move of the day? If I don't, then all of the preparation and rehearsal that I do is not worth it, because it's getting in the way of me identifying the simplest and easiest move of all. So just remember that all your preparation is so that when it comes time to execute, you can do that with confidence in a relaxed, alert state. Phase transitions in critical states has to do with, well, it's really connected to a comment Robert made in the one of the message boards, and that is that all indicators are wrong at the end of a move. And so we know that, and one of the things we have to do then is fine-tune our indicators so that they don't stay wrong too long. You don't have to be right all the time, but you cannot afford to stay wrong too long. And so if you think about the combination of the 10-period regression line and the dragon, that's a way to fine-tune the turning point in the market. You know, the RLCO moment when the 10 crosses the 30 is one of those. But the dragon and the 10-period regression line form another way that I'm really becoming fond of. It's a noise adaptive band that keeps you on the correct side of the market, but also helps you make those phase transitions. And because the best trades are the ones that come out of critical states, we want to be able to recognize them when they happen. So that's dojis that appear near support and resistance. Price that has started to slow down and is beginning to hesitate vicinity high of the day or low of the day. That's a critical state. We want to be ready for the sharp moves out of there. We don't want to be surprised when that happens because that's what it's supposed to do. Phase transitions have to do with times when the market is rolling over. It's gone through one steady phase, and now it's in this transition process and starting to roll over. We've got to recognize that it's going to do what it's going to do, and that we have to trade frame in both directions. The Zeno stop is the 2R battle drill, covers that in great detail. And again, that's one I think you ought to listen to every day for 30 days. Trade framing is the structured approach to providing cognitive scaffolding in a standard way each and every day across all of these different swing trades so that you have a standardized, systematic, holistic, consistent, disciplined way of evaluating risk and reward ratios and structuring your decision making in a standard way. No matter how you feel, you can make this an objective piece of scaffolding. So when a mason is building his brick wall or is constructing the house, that house design may be different each time, but the way he sets up his scaffolding to support him on the building of that wall is always the same. So it's a standard way to economically and efficiently go through your value add process of trade framing. Snapping turtle and hybrid frog are my two favorite most intraday stuff. The snapping turtle is the idea that the first move out of a critical state is the easiest move. It's the biggest, strongest directional move in the same way that a snapping turtle with an 8-inch neck can move his head from inside that protected shell where you can't get at him, and he goes from 0 to 8 inches extension as fast as anything on the planet, accomplishes his purpose, and then gets back into safety right away. And so the snapping turtle is a way that I think about how to go from the initial entry position with a measured risk in a critical state to no lose plus dinner for 2, and I can remove the risk to my seed capital. Once I do that, I feel like my emotional state, my psychology changes, and now it becomes a simpler science project about how much the market wants to give me and how much that I was able to take, but I haven't put my seed capital at any risk. And that's how I think of the snapping turtle. And then the hybrid frog is simply the most current way that I use to just get into the positions early, and allows me to do a balanced approach to between the leapfrog and the quick frog. It's an adjustment. It's like a second generation frog that I'm very happy with, and you've seen any number of examples of that over the last 6 months. 551W, if you listen to the executive summary of that system, you'll hear where ideas come from, and it's a perfect example of what happens when you pay close attention to your best practices and your modules and components, and you learn how to build robust systems that you can believe in from the components that you have already proved. Yeah, Robert asked me about how does the snapping turtle relate to the swing trade that seems daily. It's really just day one technique, but it also has something to do with the moves out of critical states on swing trade. So if you look at our, the work we've done before on the bottoming tail or dojis at key support and resistance levels, the reversal moves out of those dojis look a lot like snapping turtles, in the sense that first move can quite often be the easiest move. And maybe on that first day, we get 80% of what we'd be happy to get over a 5-day period. And so if you're in a bear normal or a bear volatile market like we are today, I think it pays you to come in near the end of the day to see, how did I do on day one? I got my entry and I'm holding 80% of the average trade that lasts 5 days. Why do I want to take any extra risk on that? Consider whether or not you want to bank some of that. That's what I mean by the snapping turtle performance. The next one, 0.25R improvement on every trade. If you are trading frequently and you have shorter time horizons and you're trying to cycle your inventory quite a bit, then if you can make a quarter of an hour improvement in every trade, you can reduce the losses by a little bit. You can keep a little bit more of the wins. You can make an enormous improvement in your overall performance rather than trying to get some Baroque adjustment to your trading rules that give you an additional 10R winner once a month. I would much rather try to just waste a little less on each trade by improving my technique and respecting the guy on the other side of the trade. Zero state we've talked about. Ready, Fire, Aim is an ebook that talks about trade. It's a strategy that allows us to trade in a way that we're prepared for moves. We can make low risk entries with partial positions and grow them as a function of reading price action as it progresses through the RLCO framework. So it's a way to do swing trading in a strategy way rather than a systemic way. And then the final note is that you are always trading, whether it's time for money or time for information or information for risk. Even when you elect not to trade, you're trading. Even if you turn over your trading to a mechanical system to run, you are trading your discretion for the regularity and discipline of that system. So no matter what you're doing, you are always, always, always trading. So those are maybe the top 20 insights that I shared with the super traders a while back that came out of our trading practice. And when I came back and revisited them, all of them still resonate strongly with me, and I think all of them connect to the larger challenges we have as swing traders. These fall into the area of beliefs and insights and maybe tips or techniques. So take them for what it's worth. You'll probably find essays on those kinds of things in the 150 trading essays that are in the ebooks. And I'll get with Catherine, make sure we have those uploaded for you. Okay, I'm going to take about a 2-minute break, and we're at this for about 15 minutes right now. I'm going to go take a 2-minute break and recharge my coffee. So if you need to take a break, the next thing that happens to finish up is I'm going to go through through some swing trade frames and show you how I'm thinking about the things that emerged for me from the weekend report. So let's take a 3-minute break, and then I'll be right back. Okay. Awesome. I was within 286 thousandths of a second, trying to get it right at zero. So I'm going to work on my timing a little bit. Okay, so the U.S.-Canada is on right now. I'm not going to read the report for you. This is called this level 1.5. So what I'm going to do is look at these symbols on the long side and then on the short side. Each one of them came from a reading of the report. So if you started with that list in your hand, one of the things you could do is, as you go through the report yourself this weekend, say, now why did he see that? Why did he flag that particular symbol? And why was it long or short? So these are going to be the swing trades that I managed this week. I'm just going to work off that list, and then I'll take a look at them for the next weekend report. All right, so the first one, Goldman Sachs. This was a 5-to-1 auto framer. I'll just give you the hint on that one. I'm just being nice, I guess. So what happens here is you have this tiny little doji, and so the risk line is there. The 10-day high is approximately over here. So that's the trade frame, and you have such a tiny little doji in there that this thing is a no-brainer. So this is how I frame that trade. If it fails, I'm going short. If it breaks out, I'm going long. This is my expectation up here. I really extend it from the dragon over, and then I'm looking at Z plus 2, Z plus 2.5, or no, that's Z plus 1, 2, and Z3. That's the Z3 ladder right there, and that doji is so small, that's what makes this a really attractive symbol. You'll see this one on the in the Dow 30 report for the ETF2. This was a brand new symbol in the red. We had a white on the 10-day or on the 10-week consistency, but was horrible on the strength. And this big sell-off is just painful. But this could be a swing low. It's had a little bit of performance here, and it ends in a doji, so that's a perfect critical state down there around Z minus 1. So this is really a Z trade and a ready, fire, aim trade. So that's my standard framing technique, or the indicators on stock charts, but I actually prefer the chart style on free stock charts a little better. I just think it's prettier. All right, so this one is, let's see what we got here. This should be ExxonMobil. No, I'm sorry, American Express. Okay, so I really like this one. This is an RLXD entry. If this was intraday, you could see the morning hook. Here's our little, I don't know if that's quite a bottoming tail, but we get two dots at least on the RL, or on the PSAR. The Dragon has gone from steep down to almost flat. The RL10 has made a double bottom. We've had 5 days up in a row. I love this one on a continuation of upward momentum. So I would buy this one 5 cents above. I put a stop below the Dragon. I'm looking for the Bollinger Band mean. Far side of the river, RL270, Z plus 3. If it failed below the Dragon, I would auto short this one. And then if it broke to a new swing low, I would add a second position in here. So this is my bread and butter. Let's see. This one is ExxonMobil. This one moved to the top of the Dow 30 report, and what we have is, a rebound in the energy sector. And this one may already have gotten ahead of itself, but it's got like a quadruple bottom in here. It bounced hard off that RL270, and now the river has gone from down to flat to starting to hook up. That's favorable. The RL30 has crossed the 30-period Bollinger Band and is up. This was the beginning of trending behavior right about here. And so this one looks reasonable to me. If it takes out 83.40, off it goes. I would look at, there are some, the next resistance levels are way over here, so it can get to 88 or 89 pretty easily. So if I can buy it here with the risk there, there's my 1, 2, 3 on the upside. If it were to fail from here, if the whole energy sector were failing, then my target would be back to here, and I think that's tradable. I think there's 3 units of reward in there for a tight stop. But I might want to do that with USO or XLE, but XOM has been benefiting from this bounce off the bottom. And I think if I go back over here to the Dragon, the tell, if you will, was this. I like to extend this line straight across, and this was the last sideways chunk right around the RL270. So this is that sideways quiet chop in here. And now you can see we've got a measurably different statement of purpose and intent right there. So I like ExxonMobil right there. The truth changed in energy. Even that RL90 is going up. The 270 is pointing up. The Dragon is up. The 30 is up. The river is up. That's a 10-day improvement in the energy sector. Oh, ExxonMobil again, sorry. All right, so this is Procter & Gamble. Now, this is one that I have already got some swing trading context on, so I'm already into a sequence on this one. This was a double bottom. This was the last measured move. It came down here and gave me this Z minus 2.5. I bought the RLXD here. Got this exit. It was a much better trade, and I let a lot of this get away. It was slow, so it almost bottom ticked me here. And then my re-entry was a 1, 2, 3 re-entry. Now you'll notice that the RL10 never left the Dragon. in my optimistic mind, maybe I could have said, well, why I didn't have to get out here. Yes, I did, because I was worried about it doing this. It was failing right where it's supposed to fail. And the last time it did, it came all the way back down to where my entry was. So I was willing to give up that much in order to lock in that move. But then it didn't fail further. I got a 1, 2, 3 entry, and now the RL10 has left the dragon again. And I'm watching this one carefully. My stop is here at the dot at 80.80. And if it gets above 82.80, then I feel really good about this one. And then I think that this size of this move will be the size of the next move. So I think it can get to 85. So that's a continuation on Procter & Gamble using the RLXD. McDonald's is one of those top 5 winners. It has pulled back to a perfect location to me. This last little gain right here has now pulled back, and in that time the RL270 has caught up, and this is where you would now expect it to find support if that upward trend and those conservative money managers are still going to hold it. It should look like this. That support region should hold if this hypothesis of the upward move were to hold, right? So that makes this a really nice place to buy, because now my target can be this 10-day high at 124, and now I'm buying it around 117, and so I have this, and then my risk is probably like this. So maybe $2, and then with the possibility of 9. So I like that move. I will buy it 5 cents above, and off it goes. If it fails here, then my expectation is that the size, I don't want to short McDonald's because it's been a really strong one, but if I were a McDonald's specialist, here's how I would frame that using the RLFF strategy. I would measure this distance from the RL270 to the maximum excursion on the RL10 and say that's how far the traders can push it away from fair value. So if they all disappear and get burned, then, and that's what it looks like here, see how they got burned that same distance, came all the way back, and then extend that the same distance down. Now if it fails, how far could it fail with traders pushing it the other way, all the way down to 106 or 107? So that's, if this thing fails, this is the price target, because it's going to blow right through that double bottom. So that's how I frame the trade on the other side. This is a perfect place to buy right here. This is a perfect place to short right there. And then my first target is here. Second target is there on the downside. On the upside, my target is here. And that's my risk in the middle. So I like that one. Next one, this is Coca-Cola. I look like I was drunk when I drew this one up, but I already have some context on this one. This was that distance on the RLFF, came all the way back, found support down here at the 270. I bought the RLXD here. I'm still in that trade. As long as if the 270 had failed, I would have cashed out for a fractional. At this point right here, I'm looking at it testing this previous swing high. If it gets through there and keeps going, then I feel I'm going to add a second position, and I have my stop right here right now. So that's where I am in that trade. So I like Coca-Cola. If I didn't have this position already, I would still buy this with the stop probably right about here. This one is in Walmart. This one's a little trickier to see, I think. We have this RLFF. It pulled back only halfway, found support at the Bollinger Band mean, made another leg of the same size, this move, pulled back halfway. Now that this little anomaly, it's right back at the Bollinger Band mean, which is where it lasted the last time. And so the last time it hit the Bollinger Band mean, it did this. So I think if it takes off, it can do this and go that high. If it fails from here, then I think, the move is back to the RL270. And that comes in two stages, here and then here. So this is a nice critical state for Coca-Cola. I like the fact that it had a higher low and finished very well. So I'll continue to buy momentum here, and I'll put my stop right here. And if that fails, I'm short, then that's my first target. Second target at the Z3, Z-3, and then third target down here at the RL270. But I kind of like the fact that everything crossed over the RL270 here, and now it's got this long and strong move. And here's 1, 2, and I'm betting on the potential for a third leg of that magnitude. Yep. McDonald's ATR of 2 1/4 or 2 1/2. Yep. Treasuries, I've got some context on this one. I bet some of that on Friday. So I had the RLCO or the RLXD continuation pattern. So here was the first one. I missed that. And then it made its move, came back to the dragon. The RL10 was taking off again. So I buy this here. That's one. I cash this one. It gives me a 1, 2, 3 entry. And so I'm back into that one. That's the re-entry for the second trade right here. So this was in the bank. Then got the 1, 2, 3. And again, the reason I take this one is because it was already a good trade, and I gave a lot of it back. And I wanted to protect the move to come back to the entry where I scratched. So I wanted to cash and get paid. And so now I'm long on this one. My stop is underneath here. And then if we get some weakness, like if the bear resumes, then that treasury play is going to go well. And there's still a lot of people cycling into treasuries. As you can tell, the RL270 was sloping downward and is now sloping upward. So it's starting a long-term regime of flight to quality, probably for the rest of the year, because it's such a revolutionary presidential year, and the implications of Sanders versus Trump on the economy could be extraordinary. So that's making treasuries sound better each and every day, especially with Europe showing no signs of being able to manage the exodus of all the Middle Easterners. Next one up, Microsoft. I'm already into this trade right now. It was one of the top 5 in the Dow, so on the ETF2 or the BMR report. So this one was an RLXD type of entry here after a Z2, and then a RLFF at maximum excursion. So this was my entry. This is my stop. This is still my stop. We'll see what it looks like from here. If it gets above the RL270, that's where I will get up to no lose plus dinner for 2. So we'll see how that one goes. That one's still a work in progress. I wouldn't buy this one now. Maybe if you did this, if this fails, it comes back to here. If this takes off from here, I think it goes to there. So you could consider whether or not you wanted to buy it here. Not the best setup, but that's what it is. I like this with Apple. The only issue on Apple right now is, are they going to keep acting stupid about that terrorist's phone and playing hardball? I just don't get it. They're going to cut off their nose to spite their face. But what I like is you've got this long bottoming, the half of the cup. So there's the cup, and now it's at the bottom. And we've got an RLXD right here. I'm ready to buy it on momentum at 97.50. Initial target here at the RL 270, and then up here at where the dragon failed. So there's plenty of upside on this one, and it's had 20 days to fail, and it has not failed further. And everybody has to own Apple, and you're buying it on sale. I'm talking myself right into this one. But if it fails below that line, I'm piling on. Those rat bastards that need to play ball with the feds. Next is Dow. I did this one. I know Sonal likes Dow, so this one's for her. And this has basically the same. Oh no, that's Apple. Sorry, Dow. Here was the RLXD entry, which I missed. It has come back and held support at the edge of the dragon, and it started to take off again, and finding support at the 270 where it belongs. So now I say the distance maximum excursion from the 270 to the 10 was this far, and so it can go that far on the excursion to the upside. And so here's the hump of the dragon back there. So those are my two price targets for trade framing. I'll buy this here. I'm looking for the Z3 move, and then the retest of the monthly high. It goes there. If it fails below the dragon, then I think it comes down to this hump of the dragon, and I'll go short there. IWM, so this is the weakest of the 10 regionals along with Latin America. Here's kind of that double bottom. We have the RL10, so I'm ready to hold my nose and buy this one at the green line with the target of the RL270 and then this last hump of the dragon. I will short it if it falls out of the dragon. First target is 94, and if it falls through there, I'll add a second position. Katie barred the door. That's the catastrophic failure option. So I really like IWM in that region. Here's ILF, essentially the same thing as IWM. You know, here the big fail, the dragon turned. The RL10 crossover came back, held support at the dragon, and is now taking off again. So I'll buy it at the green line with a stop at the red line. My target is here, back to this cluster. If it fails, I'll go short. If it fails below 1850, I'll add a second position. If it goes below 17 and a quarter, I'll add a third position. That's easy to believe in the weakness. The previous pivot high at 21. Well, because if it gets through the green line, it's just going to go. And this just was just a spot that it got to before. I mean, that was a 1 day 50-cent little splurge, and I'm so close to that. If I wait to get above 21 and a quarter, I'm going to give up 50 cents. So let me just buy it. And if it gets up there and hesitates, I'll cash it intraday. But I don't mind buying that one that close. On the swing trade, that's not as important to me. Your mileage may vary. Brazil looks even better than ILF and IWM on this one in terms of the long side. Anyway, so I have been shorting EWZ. This was an RLXD failure. The RL10 tried and it couldn't cross the dragon. Came out, made a new low, so I'm short. Failed again. That's the second RLXD position short. Cashing them all here. I didn't stop and reverse because I would rather go long something strong. And so now what it's done is had some sideways motion in this circle, and now it's ended up right here with the RL10 has stayed in the dragon, is getting ready to go. So I'll buy the green line, I'll short the red line. Each one is a stop for the other. If it gets through this little hump at 21.30, then I think it goes up to 24.90 or 25. That's where I would add a second position up in here. So this will all be, that would be one good trade on one scoop right there. AXP, I think I showed this one on the other, using the stock charts version. I think it's prettier in free stock charts. I like the styles and the color combinations better. I like that the RLXD, as we saw on the other one, the 10 has made a double bottom in here. The RLXD has crossed the dragon. It's crossed the 90. I've got room at the to close the gap here and here. The RL270 is there, so there's enough upside to get it. And then if it fails through the red, then I would I would get short at the red line. I had a second position here at this thick purple line, so that one's straightforward. And I think, yeah, Disney. Disney's the last one. I like the RLXD. This was a Z minus 2.5. I'm ready to buy this one right here with a stop right here. If it fails, I go short. If it fails below here, I add a second position. This is where I go long. I'll add a second position if it gets above the RL270. This distance here is what I think is the maximum distance on the upside. And that's why I would add a second position, hoping I could get it up to 121. Okay? So what we just did here was I did about 15 symbols that came out of this weekend's report for the swing week ahead. I've identified some things where I want to go long, ones where I could actually go short. I would prefer to go short, but many of these were structured in such a way that I saw the ability to go long of them too, because in my view, you get the combination of recovery and the value play on these big fat ETFs and the Dow 30s, and so I'm almost acting like an early adopter there. So I tried to frame each trade looking in both directions and targeting prices on both sides of the trade as a standard practice. What I want you to do now is go back through the weekend report, analyze those indicators, listen for the themes, figure out what made me look at that list of targets. What was the justification for narrowing on those? I've just done my preparation for these and built my trade frames, and that's what I'm going to look at for swing trading this week. Okay, so there you go. I'll get this whole thing recorded and posted for you here shortly, and we'll look forward to the week ahead in the chat room, and keep working hard. You guys are doing great. The crosstalk on the message boards are excellent. So pending your final questions, that's all I have for you tonight. Thanks for hanging in there.